traders, thank you for tuning in. Today's video I will be focusing on the trend lines. How do I draw my trend lines? Trend line is one of the most widely used concept in the forex market, probably being used by almost all every strategy out there, including myself. And how I draw it in the way I trade is very crucial. You would see, let's just go in straight, you would see some other strategies. They would draw it from weeks to weeks, like so. So from weeks to weeks, like so. Okay. So do I from weeks to weeks. Okay. From weeks to weeks. But for me, because I trade patterns and structures, I have to do with I focus a lot on them on structures. So according to the way I trade, it is structure first, then candlestick second. So the first thing I want to do is focus on or see what structure I get, or what structure we had from the market. So what I want to do is I would switch to the line chart. That's the first thing I do. I switch to the line chart. Now the line chart will give you the accurate structure, but I use candlestick just for momentum and rejection and all that stuff. But for me to see the real structure of the market, I switch to the line chart. Now from here, this is what I do. I just apply that my line from this top and to this low. There we have it. This is the best, this is the most accurate structure. I switch to the line chart. Awesome. I do something like this. Okay. Let me take out this one. Then I just come and copy this. And I put below. Awesome. So this is how I draw my trend line, but I'm not done yet. So I will switch now back to the candlestick chart. So what do I see? What do we have now? We have all these rejections. Now all these rejections, they play a massive role. The inner trend line and the outer trend line. I just copy this and clone it, and what do I have? I have this. Awesome. I have this. So this is how I draw my trend line. It is very, very powerful. Now this is how it works. When price breaks the inner trend line and other trend line, 90% of the time we have a real breakout. See the case on this case here. What happened? We had price broke this inner trend line. It rejected and then closed back below. But some other strategies, they will consider this as break, because if you go to say 4 hours, you will see it will be a breakout with the candle. You see, and just for you to discover that it was all a manipulation. Same here, price broke out of this inner trend line but couldn't break out of the outer trend line, rejected and then drop in. But if we see price broke completely out of the both trend lines, then we have a proper breakout. All we wait now is for price to come back. Now it also acts as a support and a resistance. You see, it is fully, once we break it, then we have broken out of the resistance. Now when it breaks it now, the resistance becomes now a support. So what I want to see now is for price now to come in. If it comes in, like in this case, but fails to, you see, if it comes in and breaks the outer trend line, no problem. But if it breaks the inner trend line and kind of closes below, then the whole structure becomes invalid. The whole structure becomes invalid. Okay. So it is very important. It is very crucial on how I draw my trend lines. I want to see both inner trend line and outer trend lines. But when you become used to, the concept, okay, you can draw both the inner trend line and the outer trend line. Then you will take out the inner trend line. If you want to leave it, okay, fine. But if you don't want your work to be too crowded and too dirty, you can take out the inner trend line. Then it will be something like so. Then when price breaks this one now, you know that okay, it must have broken the inner trend line. Then if it breaks it, then comes back and breaks the other trend line. Like in this case, what do? You just simply switch back to your line chart and then apply again your draw your trend, your inner trend line, just to see if price had closed below the inner trend line, so that we know if the whole structure is still valid. Then we switch back to okay. You see, price is still between the inner and the outer trend line, so it's still valid. Once it adjusts and close above, then 80 to 90% of the time, then we are going, and it is exactly what happened. So guys, that is how I draw my trend lines. I could do same for the low, but it's not really matter, because in this case the structure is more of a reversal structure. So I don't expect, even if price breaks this below, it doesn't really matter, because price is bearish in this case. But the structure is a reversal structure or correction, which is a descending channel. Okay, so what I'll be focusing on is for price to break out of the trend lines above, the inner and the outer trend lines. Okay, so let me take you to some examples, and you see how effective this concept is. Okay, see in this case what happened, the same thing. We switch to a line chart. You see we have our inner trend lines drawn, and we switch back to the our candlestick chart. And what are we having in this case? We're having our other trend line. Price, in this case, price first of all broke out, but it didn't break out of the other trend line, so it tried to come back, but finally we had our break. And what happened? It caused the price to go up. So in this case, it gives us a proper break, and it helps us to avoid a fake breakout. Though this didn't commit, but at least it did respected the trend line. This is another one. Notice price, this is the descending channel. Of course, descending channels are reversals corrections. So what we want to see is a proper breakout. Again, you switch to your line chart and you try to draw it from peak to peak. Then you switch back to the candlestick chart, and then you put here you copy the inner trend line, and then you clone it. Then you take it, put it to the first wick above there, and then it gives us our outer trend line. So we just wait now. If price breaks it like here, let's do this. Let's see. Let's examine this. When price breaks out like here, we know we have a proper breakout. What we do not want to see is for price to close below the inner trend lines. We don't want to see price close below the inner trend lines. If price is between the inner and the outer trend line, then the whole structure is still very valid. So what happened? Price broke out of both trend lines, then comes back to retest on them. You see nicely what happened? It breaks back out, comes again and retest the outer trend line. From there, we had price pushed up. From here, we should be looking now for our setup for buys, because we have a proper breakout. Not like here where it was a fake out. Price broke the inner one but was unable to break the outer trend line. Okay, and this concept works on every financial market. On every financial market. Let's move to Euro GBP. Okay, good. In this, let's see. Okay, I think this is more of a weekly. Let's move to even on. And also it works on every time frame, be it weekly, monthly, daily, or 30 minutes, 1 hour, name it. It works on every time frame. Okay, looking at here from weekly, what do we have? Again, we switch to our line chart. Just to recap, the line chart will give you the exact market structure you need to see, because how we trade is structure first, then candlestick is second. Again, we use our candlestick just for momentum and wicks and all that stuff. But if we want to see structure, because that's what we trade, that's the foundation of our strategy, is structure. We want to see structure, how it is, because from the structure it tells us what is happening or what could probably happen. So in this case, we switch to our line chart, and what do we have? We have a falling wedge, and we apply our inner trend line from peaks to peaks. Then we clone it and switch to the candlestick chart, and what do we have? We have a perfect trend line. Notice here, price tried price breaks the inner trend line, but failed to break the outer one and rejected. From here, we should have had a good opportunity for sales. Again here, it tried, it dropped. Again here, what happened? We had a complete breakout. Price pushed and broke both the inner and the outer trend lines, but rejected it and closed back below. But if you switch to, in this case, if you switch to the daily, I'm sure you would see price. Let's do that. Let's go to daily. Yes, okay. Notice how price broke out of the weekly trend line, only to turn out to be a fake out. You see, price impulse out, then break here. If you switch here, it would give us a structure telling us that we won't be able to proceed. Again, that's why it is very important for us to see structure, because the kind of structure we get will determine where, if we will have a continuing or if we have a reversal based on the structure. And the structure here, as you see, after this massive impulse here, we had a break and the sellers took it back and pushed price back inside of the trend line. And if we go back to weekly, that's why we got that rejection. That's why we got the rejection. Again, price came back down, tried again one more time, and finally we had our breakout. Once we see price broke out completely from weekly, then we have a successful breakout. All we want to see now is for price to come back and retest the trend lines, which now acts now for, when it was inside, it was acting like a resistance. As you see, it was resisting price to break from preventing price to break out. So it was acting like a resistance. But now once we had the proper breakout here, price pushed up and now it's acting like a support. You see, price came down and then failed. In this case, price broke both the outer trend lines and the inner trend lines, but was unable to close below, which means the whole structure is still very valid. And from there, we had our opportunity for buys. If we switch to, let's say, H4, I'm sure on here we should have an opportunity in terms of structure, and it is exactly what we are having. Again, what I want to see is structure. I focus on structure first, then candlesticks second. So I switch to my line chart. What do we see? You see price impulse down, and the correction we get, it's more of a descending channel. What do we have? We just do that. Just apply our trend line. Okay. And we clone and do same, apply it on the, there we go. Awesome. Okay, and we switch back to candlesticks. There we have our structure. You see, this is a very strong confluence, because this is the weekly trend lines, and what are we having on H4? We have a descending channel acting upon a weekly trend lines, which is now acting like a support. So if you add both confluence, we have a descending channel on top of a weekly support. What does that tell you? If you combine the two confluence, all we wait for is for price to break out of the H4 trend lines, like here. This is our complete breakout. We have a breakout now from the structure, which means we are now ready to start buying, and it is exactly what happened. Okay, let's move to Nasdaq. Okay, this case this would be a daily, I presume. Yes. Okay, if you notice, the candlesticks will not give you the structure here is not really clear. Again, what I mentioned before, we focus on structure first, then candlestick second. So when you open your chart and it is this messy, what you want to do is switch to a line chart. The line chart will give you an accurate structure. You see now here it is much better. You see everything clearly. But if you, when we were here, notice, looks like horror. Okay, so you want to switch back to a line chart, and it will give you the best structure. and you just apply your trend lines below and above. Okay, and what we want to do again after we do that, we clone the one below, because in this case this is an ascending channel, so I'm expecting price to reverse from this bullish move to a bearish move. Okay, so the structure you get again will give you the next move, probably or potentially, that what the market could be doing. So in this case, it's an ascending channel. So an ascending channel, it's a reversal structure or correction from a bullish to a bearish. So okay, we clone the outer one and put below. So what happened? Notice we had price broke out of the inner trend line, but wasn't able to break out of the outer trend line. That's why we had this rejected back inside. Okay, again, for us to be sure that price has broken out of the whole structure, we want to see price broke completely out of both trend lines. Once we have this, then we will be expecting for price to either retest the outer trend lines, or sometimes price will retest the outer trend lines and you will think that okay, we are good to go, only to see price fail and then push back inside again, retest the inner trend line without closing above, because if you close above, the whole structure becomes invalid. Sometimes you will see price will push back and retest the inner trend line, breaks it back again, then finally retest the outer trend line before we see price commit, and then we get our reversal. Okay, so sometimes I will wait for price to break out, not only for it to retest back the outer trend line, but again also wait for it to retest the inner trend lines. But for price to do that, it will give us structure. You just follow what price is saying. Structure, it's very important. Once you follow structure, because structure is the footprints of the market. The market wouldn't do anything without giving you an information or a clue. If you are able to read what the market is saying in terms of structure, then you will hardly be deceived by the market. You will hardly be deceived by the market. Trust me, guys. You hardly. So we focus on structure first, then candlestick comes second. Okay, so let's proceed. Okay, this is another how we apply our trend lines. Applying your trend lines the right way, guys, will give some extra benefits on. Okay, see, in this case, what do we have? We switch to our line chart again one more time, and we have our inner trend line. So we just clone it and it gives us the outer trend line, and we apply it from this week here and all the way down. You see, notice how price broke the inner one here but rejected two, but failed to break the outer trend lines, and then what happened was a rejection. Same here, same here. Then finally, what do we have? We have price broke out both the inner trend line and the outer trend lines. We have a complete break. Now this is a proper breakout. We don't want to see, now that we have this break, we do not want to see price close back below, because if it does, then the whole structure becomes invalid. Again, we wouldn't have now to adapt. Okay, but we had the breakout and price comes and exactly did what it's supposed to do to respect the whole structure. It retested the trend line. It becomes now from a resistance to a support, and what we have price commit all the way up. Okay, let's move to gold. I think that will be the last example. Again, this thing happens over and over in every financial market. So far as it is a candlestick chart, then it will be, the concept will be the same in every financial market. The same thing over and over again. Okay, on gold, what we have an impulse followed by a correction. So we want to draw our trend lines to see, because in this case, this is a flag for a continuation. So how do we draw our trend lines? Again, we switch to a line chart to give us the proper structure, which is from this week to, from this peak to this peak. We just apply our trend line and clone it, then switch back to the candlestick. What do? We apply it from this week here, and it then sets by itself all the way down. Okay, let's see what happened. Notice price comes here and rejects, and then it wasn't able to break both trend lines. Happens to be a rejection, and then price drop all the way down. Here we had price push up, failed, and then here it wasn't a breakout. The price rejected, came back down. Then here we have our proper breakout. Again, what we do not want to see is for price to break out and close back below both trend lines. So price came back. You see, notice here, this was perfect. Price came back, but it didn't close below the trend line, below the inner trend line. This was more of a rejection. You see, price came back, but failed to close below. Then the next candle opened in between the inner trend line and the outer trend line. And what do we have? We have price completely outside, and then we are having price committed to the way up. Okay, so yes guys, that is how we draw our trend lines. It is very important according to the way we trade. Other strategies, they draw it differently, but this is how we draw it. This is just the basics, and if you want to know more, and if you're interested in trading this way, all you have to do is click on my Telegram channel below, and we will take it from there. So please like the video, comment if you have any question. I'll be happy to reply, and above all, please subscribe to this channel, as we are still very new. We are trying to push it to many people out there. So subscribe, and yes, see you in the next video. Cheers guys.